Hello traders. Good morning, good afternoon, and good evening, depending upon your time zone. My name is 𝗪𝗲𝗪𝗍𝗵 and welcome to True Trading webinar. I'm excited to be here from Traders United. First, risk disclaimer. House rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. Okay, these are the main topics that we are going to cover inside today's online webinar. Okay, let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. Let us start with the core CPI for the United States, and the most affected currency pair is the Euro USD. So what is core CPI? The core CPI, or the consumer price index, measures the monthly change in the average price of a basket of consumer goods and services, excluding food and energy due to their volatility. It provides a clear view of underlying inflation trends and helps assess changes in the cost of living. The core CPI is a crucial indicator for the Federal Reserve's monetary policy, as higher inflation may lead to interest rate hikes, strengthening the US dollar, while lower inflation can signal a weaker economy, potentially leading to rate cuts and a weaker US dollar. Now, on March 12th, 2025, we got the results, and the previous number was 0.4, the forecast was 0.3, and the actual number we got is 0.2%. The market was expecting inflation to slow down to 0.3, but the actual result of 0.2% indicates that inflation cooled faster than expected, which has significant implications for the Forex market. The impact on euro dollar and market reaction. Let me show you the chart of euro USD currency pair. Since inflation came in lower than expected 0.2% versus 0.3% forecast, the market interpreted this as a sign that the Federal Reserve in USA may ease its monetary policy sooner than expected, as inflation is not as persistent as feared. Traders adjusted their expectations for future interest rate hikes, increasing speculations that the Fed may consider rate cuts later in 2025. And this weakened the United States dollar, leading to an upward move in Euro USD as investors moved towards the euro. So the overall analysis is that on the March 12th core CPI report showed that inflation cooled but more than forecasted, reducing pressure on the Federal Reserve to maintain high interest rates. And this led to lower than expected inflation, which means weaker US dollar, and the Euro USD currency pair actually moved up. It rises, and it reduced the rate hike expectations, which is again, the bearish sentiment for the US dollar. The market reacted accordingly, with Euro USD moving up as traders anticipated a potential shift in Fed policy towards a more dovish stance. So the conclusion is the weaker than expected core CPI, which is the 0.2%, resulted in Euro USD rising, as the market now expects the Federal Reserve to take a less aggressive stance on interest rates. This enforces the idea that lower inflation could lead to monetary easing, weakening the United States dollar and supporting further gains in Euro USD in the short term. Now let's go over to the GDP, the gross domestic product for the UK. What is GDP? Um, the gross domestic product GDP measures the monthly change in the total value of goods and services produced within the United Kingdom. It is a key indicator of economic growth, business activity, and overall economic health. A higher GDP reading signals stronger economic expansion, which can lead to higher interest rates and a stronger British pound. Conversely, a weaker GDP suggests economic slowdown, which could weaken the British pound, as expectations for monetary easing increases. Now, on March 14th, 2025, these are the numbers, the actual figures. So the previous number was 0.4%, the forecast was 0.1, and the actual we got is minus 0.1%. The market expected 0.4% GDP growth, but the actual result is minus 0.1%, indicated a contraction instead of expansion, suggesting economic weakness in the UK. Now, the impact on GBP and market reaction is, despite the weaker than expected GDP report, the GBP USD moved up. Let me show you the chart of British pound versus US dollar. This is the daily time frame. The GBP USD moved up instead of declining. The reasons behind the market reaction could include market positioning and expectations that the traders may have already priced in a weak GDP, leading to a reversal when the news was officially released. Secondly, Bank of England BOE policy outlook is that if the BOE maintains a hawkish stance despite weak GDP, investors may still find the GBP attractive. The weaker United States dollar, the broad weakness that we got in the global markets, could have played a role in supporting an uptrend in GBP USD currency pair. So the overall analysis is that on March 14, the GDP report showed a minus 0.1% contraction, which was weaker than the expected 0.4% growth. However, the market reaction suggests that the GBP moved up despite the weak GDP data, possibly due to market positioning, US dollar weakness, or expectation of sustained BOE policy stance. Now, for those traders who are doing trading in GBP USD currency pair, they should monitor additional factors such as inflation data and central bank statements for further confirmations of British pound strength or weakness. The conclusion is, although the UK GDP report was disappointing, the GBP US dollar currency pair still moved up, highlighting that the currency movements do not always align directly with economic data, and traders should also consider the technical analysis point of view as well, along with broader market sentiment, central bank policies, and US dollar trend to better understand market action in GBP USD currency pair. Next, previously we discussed about the euro dollar and British pound. So let me go back to the price chart. So I was expecting in euro USD, let me see. I was actually expecting a pullback and actually got the pullback. Okay. And then from this pullback, I was expecting a bullish leg and we got it. Let me zoom in a little bit. So this was the expectation, and this is exactly we got in euro dollar currency pair. A bullish uh, price action after a bearish pullback. And regarding the pound dollar, I was expecting overall bullish price action. I know the RSI is overbought. It is hitting the 70 level, but the trend is bullish overall as price action just keep printing higher swing highs and higher swing lows. Okay, now let's discuss about current week macroeconomic events and data releases. The first one is on March 19th at 6 p.m. BOG policy rate related to Japanese yen. And the currency pair that we should pay attention and focus is the US dollar versus JPY currency pair. The second economic event is unemployment rate in Australia, and the currency pair to focus is the AUD versus USD currency pair. And the report is going to release on March 20th at 12:30 a.m. UTC time. Now, let me explain what is this BOG policy rate. The Bank of Japan, the short word is BOJ, policy rates sets the interest rate applied to excess reserves held by the commercial banks at the Bank of Japan. This is a key tool for monetary policy influencing borrowing costs, inflation, and overall economic conditions in Japan. A higher than expected rate is bullish for the Japanese yen as it signals potential tightening, while a lower or unchanged rate tends to weaken the Japanese yen. Now, on March 19, 2025, the report expectations is the previous number is less than 0.5%, and the forecast is also 0.5%. The actual number did not release yet. The Bank of Japan, the BOG, is expected to maintain its ultra loose monetary policy, keeping the rate below 0.50%. However, any surprises in the actual decision could cause significant movement in USDJPY, possible scenarios and impacts on USDJPY. Now let me show you the chart of USDJPY currency pair. This is the daily time frame. Now, if the BOJ raises interest rates above than 0.50%, this would signal a shift towards tighter monetary policy. The Japanese yen would strengthen, leading to a drop in USDJPY currency pair. Investors may see this as the BOJ beginning to phase out its dovish stance. If the BOJ keeps interest rate at 0.5% as expected, the market reaction may be neutral as this outcome is already priced in. USDJPY may show little movement unless BOJ signals future policy changes. If the BOJ lowers interest rates further, a more dovish stance would weaken the Japanese yen. And in that particular scenario, USDJPY would likely rise as the US dollar strengthens against a weaker JPY. This could indicate that the BOJ remains committed to monetary easing. Now, if you take a look at a price chart, overall, what we got is we got a bearish decline. Let me delete all of this here. And this looks like a nice bearish trend channel. I will talk more about the USDJPY when we actually do the analysis. So overall, I see that the USDJPY is falling down and the United States dollar is becoming weak. So the conclusion is the March 19th, 2025, the BOJ policy rate decision will play a crucial role in USDJPY price movement. If the BOJ surprises with a rate hike, JPY will strengthen and USDJPY will fall. However, if rates remains unchanged or are lowered further, Japanese yen may weaken, pushing the USDJPY price higher. Traders should also focus on the BOJ's forward guidance for future rate policies. Next one is the unemployment rate in Australia, and it has directly related to the AUD-USD currency pair, which is the most affected currency pair. Now, let me talk a little bit about what is the unemployment rate. The unemployment rate measures the percentage of total labor force that is unemployed and actively seeking work. It is a key indicator of labor market conditions and overall economic health. A lower unemployment rate signals a strong job market and economic growth, while a higher rate may indicate economic weakness. On March 20th, 2025, the report expectation is the previous number is 4.1%. The forecast is also 4.1%. The actual data did not release yet. Now, let me show you the Australian dollar versus US dollar consider daily time frame. The market expects the unemployment rate to remain unchanged at 4.1%. The actual figure will determine how the Australian dollar reacts in the Forex market. The possible scenario and impact on Australian dollar would be if the unemployment rate is lower than 4.1%, then it means a stronger labor market would boost confidence in the Australian economy. The Reserve Bank of Australia, RBA, may maintain or consider tightening monetary policy. AUD-USD is likely to rise as a stronger AUD gains against the United States dollar. So generally speaking, if AUD-USD is moving up, okay, then it means if the AUD-USD currency pair is moving up, then it means Australian dollar is becoming strong and the United States dollar is becoming weak. Now, if the unemployment rate matches the 4.1%, the result would confirm stable job market conditions. Market reaction may be neutral versus US dollar currency pair. If the unemployment rate goes higher than 4.1%, which is the forecast level and the previous level, it means we're getting a weakness in labor market, and it may signal economic slowdown in Australia. The Reserve Bank of Australia, the RBA, may adopt a more dovish stance, potentially leading to rate cuts, and AUD-USD could decline as a weaker AUD loses value against the United States dollar. So the conclusion is that on the March 20th, 2025 unemployment rate data report will be a key driver for the AUD/USD price movement. A lower than expected rate may strengthen the Australian dollar, pushing AUD/USD higher, while a higher than expected rate could weaken the Australian dollar, causing AUD/USD to fall. The Forex traders should also watch out for any RBA policy signals following the release. Okay, next let's try to do the technical analysis. And I'm going to cover the euro dollar, Australian dollar, US dollar, spot gold, and I'm also going to cover the stock, which is in this case is the MSFT, the Microsoft Corporation stock. Okay, so let's go over to some price charts. We're going to start with the euro dollar. Okay, euro USD. The way I see this week, we do not have critical data related to the euro and US dollar. So the chances are euro USD is most likely going to move sideways. Price action is also testing an important resistance level right over here at 1.0938 level. So this is a nice resistance. The whole thing could turns out into some kind of a tweezer top or a double top chart pattern maybe. So the way I see price action is probably going to move sideways, and then it's going to break higher. Okay, next we have the Australian dollar AUD USD currency pair. Okay, AUD USD currency pair is actually testing the old resistance level at 0.6382. Okay, so this whole thing could turn a little bit sideways, and we might see a drop in price action or a pullback somewhere around 0.6188 level, and then price is going to rise up after that. Okay, so I expect overall sideways price action inside AUD USD currency pair. Next we have the United States dollar USDJPY over here. Okay, USDJPY, we got this nice downtrend going on inside USDJPY currency pair in daily time frame, and it seems to me, if you take a look at weekly time frame or monthly chart, seems to me, we got a top in USD Yen, and the United States dollar is now becoming weak. The USD JPY is falling down, so the Japanese yen is becoming strong overall, and we might get a little bit pullback over here in price action, and it's also possible that we get some kind of a false breakout, and then price action is probably going to drop after hitting the old swing high. Next one, we have the spot gold. Okay, spot gold, I was kind of expecting a top, but price action just keep printing higher swing highs and higher swing lows. If you take a look at the monthly time frame, let me zoom out a little bit. There's a nice uptrend going on, and price action just keep printing higher swing highs and higher swing lows. What I mean by that is, if you take a look at this chart over here, this is the weekly time frame. Okay, okay, you see price action just keep printing higher swing highs and higher swing lows. So overall it looks bullish. I'm trying to duplicate this thing. Okay, here we go. So you see, we keep getting these, higher swing highs and higher swing lows pattern. So overall, it looks like to me that price action is rising up, and I expect further upside in spot gold. We do not have a reference point on a price chart as far as the technical analysis is concerned. However, we can apply an indicator such as RSI oscillator to check out. I'm sure the market, it would most likely going to show overbought reading. So in monthly time frame, RSI is well above the 70 level. Previously, when we have seen the same thing, this is where we got the top. So what's that level? That level is around um, 80. Okay, let me adjust it. So instead of using 70, let's use an 80 level. So RSI went above the 80 level right over here, and we got a sideways price action. We got overall bearish decline, but that was a temporary drop for a few months. After that, market resumed the uptrend. So I have the same expectation in spot gold in coming trading months. We're probably going to get a top. If you check out the weekly time frame, we have the same story. RSI is hitting the extreme overbought levels, and same thing goes if you check out the daily time frame. It's already way above the 70 level, because the 70 level with the RSI is down over here. So the way I see, price action is probably going to rise up more, but sooner or later, I expect a top and a drop inside spot gold. If you take a look at the 4-hour time frame, let me remove the RSI over here. And okay, this is a base channel, and then we can draw another channel. So you see a nice acceleration in price action. We got consecutive bullish candlesticks over here. So price action is marching upward, and it's a nice uptrend going on overall. But sooner or later, it's going to print a top probably next month. Okay, next, MSFT, Microsoft Corporation stock. Let's take a look at MSFT. If you check out the monthly time frame, it seems to me we got a nice spike in price action inside Microsoft uh, Corporation MSFT stock. Now, as of March 18th, 2025, the Microsoft Corporation stock is trading at around 388.95. Let's go to the daily time frame. Yes, some 388 point. It's actually 388.76 in daily. Now, if you check out the monthly time frame, it seems to me price actually printed a top over here. Let me add the RSI. I'm also going to talk about some of the earnings reports as well. Okay, relative strength index indicator. Let's use the 30 and 70 default reading. So it is quite overbought. We are also getting some divergence over here. We got a new high in price action, but if you check out the RSI is unconfirming this new high. So this is known as divergence. So we could probably, going to get a top and a drop in price action of MSFT. So as of March, let me zoom out a little bit. As of March 18, 2025, Microsoft is trading around $388.70 a share. This stock has been experiencing a decline inside the daily time frame, reflecting investor concerns despite strong earnings performance. For example, let me talk a little bit about uh, the Microsoft reported fiscal year quarter second earnings. On January 29th, 2025, Microsoft reported its fiscal year 2025 quarter second earnings with revenue of $69.6 billion. So and the net income of $24.1 billion. And the earning per share came in at $3.23, exceeding analyst forecast of $3.12. However, Azure cloud revenue growth slowed to it's slowed to 31%, slightly below expectations, contributing to market caution. The Microsoft artificial intelligence, the AI business is expanding rapidly, reaching a $13 billion annual run rate. However, the Intelligent Cloud unit posted revenue of $25.5 billion, falling short of forecasts. The next earning report is expected on April 24th, 2025. It's yet to be confirmed the date. So investors will be watching closely for updates on cloud and artificial intelligence growth, which are key drivers of Microsoft's future performance. By looking at the monthly time frame, the way I see price action is probably going to move sideways, or it's probably going to start the decline. Okay, so that's probably going to happen. And in daily time frame and also in weekly, we actually got this nice decline. If I remove the RSI, you can see that price action is basically it's going down. And is the base channel, and then we can draw a second channel which is also bearish. Okay. Okay, so overall price action is falling down inside MSFT stock. Okay, so what you have learned today, I discussed about the BOJ policy rate related to Japanese yen currency pair, the USDJPY, and we also discussed unemployment rate related to Australia. And then we further did the analysis on euro dollar, USDJPY, AUDUSD, and spot gold. I even covered the Microsoft Corporation stock as well. Now, what you should do next? Well, you can check out the next week's trading webinar schedule. You can subscribe to our social media pages. And if you are interested to learn more about trading, visit the Trade Geek and access free trading courses available online for beginners, intermediate, and expert traders. So that's it for the time being from my side. Thank you for hanging around. See you at the next trading webinar on Tuesday, March 25th, 2025 at 12 p.m. UTC time. So that's it from my side. Have a nice day and bye-bye.